Right, so this is chapter 1, personal financial basics and time value money. So we'll do a little bit of time value money review in this chapter. So you should all have an outline in front of you. That's the best way to go through these with me, of course. Try to go through them fairly quickly. I'm not going to read every single thing on them. So for example, here's the learning objectives. You can read those at your time whenever. So chapter 1 is about personal financial planning. Of course, that's what the whole course is about, and which is the process of managing your money to achieve your personal economic satisfaction. It's basically so we can have financial well-being, so we can retire. We don't have to work all of our lives. So this class is geared for those who want to be able to financially plan for themselves, which should be every single person. But it's also for those that are going to help people do financial planning. So maybe some of you are thinking about being a certified financial planner or financial advisor or whatever. So some of the advantages of personal financial planning are, you can read there, and so once again, I'll have these blanks. I have the blanks there for you to fill in, because as you write them in, those are the words that I think, or the concepts that I believe are kind of key or important. Probably ask more questions about those on the quizzes. And don't think about this as simply trying to get through the class and get an A. It's not the hardest class. It's pretty straightforward. But try to think about it as wanting to learn something for your advantage of being able to be financially well off in the future. So this first blank says improve personal relationships. So personal relationships come into play because money is the #1 cause of issues with personal relationships, meaning divorce and breakups and so on. So if you can have your financial planning or your financial house in order, then a lot of other parts of your life, including your health and so on, will also fall into place a lot better. You have a sense of freedom from financial worries. So one piece of advice: if you start planning now for your financial future, your life will be so much easier. You'll have this much more of a sense of freedom, because you are starting to put money away to have that financial independence when you retire, or when you want to retire. Many Americans can't come close to being able to retire. And if they are, they're going to be living on Social Security, which is not a good thing. And so I know you don't have much money now, and retirement's the last thing on your mind because you're just hoping to get a job. But even just starting to put things in place now will put you so far ahead in front of other people. So this is a quote from Benjamin Franklin: "If you fail to plan, you are planning to fail." So if you fail to plan, so think about this, if you're not planning, you are probably going to fail. Now, what are the chances? Well, there's some studies that say if you just write things down, you are like about 40% more likely to achieve those goals by just simply writing them down. So this is about financial planning, trying to figure out how much money you're going to need for your kids' education, if you have kids, if you're going to have kids, how much insurance you need, where you're going to live, how you're going to pay for your car, what kind of, all this stuff. Now, I'm very aware of this quote. I wasn't sure if it's Benjamin Franklin. Okay? So always remember this, said by Abraham Lincoln: don't believe everything you read on the internet just because there's a picture with a quote next to it. So, not real sure about the Benjamin Franklin thing. All right, so here's the financial planning process. It's not on your sheet there, it's in your book. Kind of all the steps, and we're going to walk through all these steps for this chapter. So the first step in your planning process, figure out what your current financial situation is. You're going to set up like a balance sheet, income statement, cash flow statement. And if you're a financial planner, you'd be asking your clients for this information. Try to develop financial goals. So as we go throughout the semester, there's going to be little parts of all of these that I'm going to have you do yourself to put into kind of a financial plan. It's a pretty condensed financial plan for yourself later in the semester. Once again, I'm not going to read these to you. You can do it. This is just some information I got. What is the median net worth by age? So um, I want you to think for a moment. What do you think the median net worth by age is for, say, a 50-year-old? Now, so you can pause this and think about it for a moment, which you probably won't. You just want to keep listening. That's fine. So I'm going to show you the median and the average. So here we go. Under 35, the median is 11,000. The average is 76. So the average is much higher because there are some people that are extremely wealthy, and that brings up the entire average. So the median is really a much better kind of metric to use here. So I said 50 years old, which would be right in between here, it was about 187,000. Okay? So these are the numbers I'd really focus on instead of the averages here. And for most people, these numbers are not near high enough to be able to live on if you want to retire. I mean, you can get by, especially if you have some Social Security, and then it's possible you have some sort of pension. Okay? So what should you be shooting for? So most of you are in your 20s. This is saying what this chart is, this is just a rough rule of thumb, is that by your time you're 30, you should have saved basically 1 times your starting salary, meaning in year 30. So if you're making $70,000 when you're 30, that's how much you should have saved. If if you're making $100,000 and you're 50, you should have, do the math, real simple, you should have at least 600 grand there. Okay. So just a rough rule of thumb. It's probably better to have a little bit more than that, but anyway, just some numbers for you to think of. And it's a pretty easy kind of way to memorize things. Now, you'll be working for a company and they'll give you a little bit more specifics there. Okay. Step 3 in the financial process. So what happens if your course of action doesn't work out? Okay. Well, we've got to have creativity. You know, think about, okay, what happens if I lose my job? What happens if I can't pay my mortgage? What happens if I get a divorce and I don't have the income of my spouse if I'm staying at home? So try to be creative. What can you do? Always be thinking about, always be learning new traits and so on, so you can maybe change to another career if you need to. Step 4, evaluate your alternatives. What are the consequences of your choices? Opportunity cost. What you give up by making a choice. So you could get, maybe a higher paying job at your work if you got your MBA. So what's the opportunity cost? Well, to get your MBA, if you went full time, you're out of the workforce for a year or two, and you're not bringing any money in at all. The cost, so that's the cost. The opportunity is that you're going to have a lot, hopefully better job that you might like better, and you're going to get more pay. So that's kind of an example of opportunity cost. Okay? And so this is the trade-off of making that decision is when we talk about opportunity cost. So it's a very important concept to really understand. Evaluate risk. So to minimize risk, information is power, and understanding more about any situation is going to give you put you in a better position to be able to minimize risk, knowing that, okay, what's going to happen with this industry? Is this industry growing or is it shrinking? If it's growing, then you're going to have a greater chance of getting a job in there. So, look at potential future careers that are growing. Fortunately, financial planning is one of the top growing fields when we look at all fields, because we're in a do-it-yourself situation when it comes to being financially responsible or financially independent, if you will, because in the past, even before my generation, we had pensions. There were pensions that helped people retire, and the company helped fund that, and that is pretty much going by the wayside anymore. Step 5, create and implement your financial action plan. You can read that. I'm not going to read that to you. Step 6, you should review your plan regularly, at least like once a year, to make sure things are going well. So that means if you're a financial planner, try to schedule at least annual checkups with your clients to make sure everything seems to be going the way they think it should be going and the way you think it should be going. Okay? So all this slide is saying is that as things change in your life, so for example, your adult life cycle, you're single, then maybe you get married, then you have kids, then your house changes, maybe your employment changes. All of these kind of life situations can impact your financial planning. That's all that's saying, right? Now we're really kind of changing a little bit. I know this influence on personal financial planning. Now we're talking about influence of the financial system, and we're getting really general, really high level. A lot of you have taken maybe markets and institutions. You've taken investments class. We've talked more, or insurance. You talked more about banks and insurance and whatever. And we're not going to get that deep in that. All this is saying is it's a good idea to have some basic understanding of how money flows. It comes from, of course, savers and goes into the stock market and the bond market. And those monies are used by companies to fund growth and so on. Economics, good to understand a little bit of economics. Most of you have already had an economics class. So economics, study of how wealth is created. To me, the most important words in economics are supply and demand, because going into any business, if you don't understand those two words, and you might as well not even go into business. Keep in mind that whenever we talk about the Fed, we're talking about the Federal Reserve Bank, and it's had a major impact or major role during COVID. By lowering interest rates, they were going into the market and buying up bonds and so on. So it's important as a financial planner to know what is the Fed doing, because that may impact the portfolios of your clients. It definitely will impact it, depending on which way interest rates are going. So having a good understanding of just economics and the Fed is going to help you be a better financial planner and better at doing your job for yourself, understanding these elements also. Of course, understanding how the global influences are out there in terms of if something is happening with China. So we've had a lot of issues with America and China with trade and so on. And so is that going to impact your portfolio? So for example, I own Alibaba, which is kind of like the Chinese Amazon. And it's been impacted negatively, the stock, because the United States is considering banning Chinese firms from trading on the stock exchanges here, and unless they're audited just like American companies. And if you take their stocks out of the kind of the American portfolios, then that's going to mean less demand for the stock, and the stock price has fallen. So I don't know, I've lost about 8%, I think, just in the last month. So not good, but understanding these things is beneficial to your future. And so talking about economics again, so of course all of these items here are going to potentially impact your financial situation. So, your own unemployment definitely is going to impact it. If you're fully employed, but the unemployment rate is going up and up and up, that means potentially your job is impacted because there's fewer people that have jobs to buy maybe the product that your company is offering. So that's just one example of how all of these can impact us all personally. So, of course, all of you should know already what inflation is, the rise of general prices. And then the book starts going into kind of time value money, talking about the rule of 72. So all of you, I think I've got a question or two on the quiz about calculating the rule of 72, you should have done this in Finance 3000. Just simply means you take 72 and you divide it by the interest rate. So if I said 8%, that means that roughly every 9 years money doubles. Money doubles. So that means if you had $100 today, in 9 years it becomes $200, in 18 years it becomes $400, 27 years it becomes $800, and so on. Okay? That's just a rough rule of thumb. It's a good thing to kind of have in the back of your mind. Okay, so moving on to financial goals. So when we talk about financial planning, you can't really plan unless you have any goals. And so we'll have all of us will have different goals at different kind of times in our life. So one of your major goals might be to eventually buy a house someday. A shorter term might be to buy a car if you don't have one. Shorter term might be, I got to get a bike while I'm living here at OU. So different goals, different times. So those times are typically classified into short, intermediate, and long term. Intermediate's like 1 to 5. Short is before that, long is of course after that. And so goals for different financial needs. So I just mentioned car, bike, house. Those would be what we call durable products. Okay? Things you buy, they typically are going to be used for a while. Consumable would be things that, of course, food, paper products, office supplies, things that you use up kind of right away. Hand sanitizer. Yeah, just remember I just went to Starbucks. I didn't hand sanitize, so I better do that. Of course, it's just me in here, but anyway. Okay. Intangible purchase goals would be concert tickets, experiences, going on vacation, things like that. So those are some examples of kind of different types of goals. And probably in one of your management classes, you've heard about this kind of SMART guidelines. SMART stands for acrostic: specific, measurable, action-oriented, realistic, and time-based. SMART, if you can put your goals and you can kind of check off all these boxes, that'll help tremendously. I really like this book. Well, I took the cover off here so you can't really see it. Atomic Habits. Atomic Habits. It's like one of the best-selling business books right now, and I'm going to talk about it. So you might want to write this down. It's a really good book, especially at your age. This is like the perfect time to be reading it. It's really easy reading. It's just talking about how you can develop positive habits. During one of the weekly check-ins, I'll just give maybe kind of like a 5-minute overview so you can get to kind of gist about Atomic Habits, because it's great, something you can share with your clients even, and more importantly you. So we're going to kind of transition now into time value of money. And so they put it together with opportunity costs, because opportunity cost is the trade-off of doing one thing with another, and that could be something that costs you money now is not going to have benefit until the future. And when we're looking at financially, as hopefully you all realize, that money in the future is not worth the same as if you had it today. So $1 today is worth more than $1 in 10 years from now, because you can take the dollar and invest it for 10 years. Okay? So this is saying every financial decision involves giving something up to attain something else. So you really got to be careful how you manage your funds there. So since we're not having class in person, you're allowed to use your iPhone. You're allowed to use pretty much anything. It'd be great if you didn't, you weren't cheating. But there is an app on your phone that you can get on your phone, that's free, the BA Financial Calculator, or you should have one of these calculators from in the past, from Finance 3000 or one of your other classes. But I'd like you to use that for the quiz. In your book, by the way, they use charts, and you can't really access the charts digitally during the quiz. So So on the bottom or the second half of that page there are some questions that I took like from my 3000 class. Would be very similar from what you had from your 3000 class. So I want you to work on these on your own. There'll be some similar to that on your quiz, and I'll go over these if you have any questions during our weekly check-in, and I'll give you the answers at that time also. All right. So in terms of kind of like an overview of the rest of the course, you can see all of the chapters there, and it's really all the components of financial planning. Getting your money, planning it, saving it. So we're going to do even more planning in chapters 3 and 4. You know, this is the chapter, probably chapters most of you like would be investing. We've got quite a few chapters there, and so on. So just to kind of wrapping it up here, a financial plan is a formalized report that summarizes your financial situation, analyzes your needs, and here's the big thing, recommends future financial activities. So as a financial planner, you're going to hopefully be recommending to your clients what they should be doing. As an individual that's trying to learn this on your own, you're going to try to figure out what you should be doing. Okay? So these financial plans, you know, you can do them on your own if you know enough about them. You can use a software package, and right now, so typically in class I ask my students this question and have them Google it. What is the most used financial planning software? And the number one software is what we call Money Guide Pro. And we have, it's pretty expensive, but we have a educational version that you get to use for this semester. The login information is in your syllabus. Make sure, a couple things, when you log into it, use your OU email and write down your password, because I've had numerous times students forget their password and it's a pain. For some reason they can't ever get it fixed. So try to do that for me. You can go in there and play around with it if you want. Do not contact the company if something's not working, because we are not paying for it and we do not have access to their help desk. So contact me if you have issues. We are not going to work on this until at least like the second half of the semester. But I'm going to give you a kind of a project to do with it. It's going to be part of your financial plan that you're going to turn in at the end of the semester. I'm going to maybe give you kind of some quiz questions over a sample plan and so on. So the main reason I'm bringing this in here for two things. One, so you can see what a financial plan looks like. And two, those of you that are going into the financial planning business, this being the number one software, if you can go in and say, yes, I'm already familiar with this software, I've used it in class, I've developed a plan for a fake client or whatever, you're going to be that much higher up in the hiring than someone that's never been exposed to it. So if you are going to be, especially those of you that are going to be a financial planner or go into that field, you should be looking into this right now as soon as we are done, and just play around with it and try to understand what it's about. Okay, last couple things here. These are just kind of good financial habits. Once again, you can read them. Make sure you always have insurance for protection. We'll talk a lot more about insurance later. And that's it. Now, before we go, you'll notice at the back, the last page of your handout are some sample interview questions. And with these interview questions, I'm gonna set up, I haven't decided quite yet, I haven't done it before, but probably like about 5 to 10 minute meetings with every single one of you, and I'm going to interview you for a job with my firm. And my firm is going to be in the field of whatever it is you are interested in. And so during that interview, all of these questions are fair game. So I'm going to, depending on how our interview goes, I'm going to pick randomly. Not everybody's going to get the same questions. And I'm going to ask you for your elevator pitch, which means like 30 seconds of why I should hire you. So be working on that and be thinking about answering these questions. Okay? And we'll set up interviews later. And that's it for chapter 1.